Hey, what's going on, everybody? Welcome to midweek rapid review. Uh, Basically, be doing the same thing I do in the Bobby breakdowns, break down everything that won the overall market today, and get everybody ready for the next open tomorrow. Chat is open as always. Questions, comments, concerns, anything you got, agree, disagree. Feel free to drop that in there, and yeah, we will get to it. So, without further ado, it's time for the rapid review. All right, there you guys go. As usual, educational, informational purposes only, not financial investment or trading advice. All right, we'll do this in a little bit of a reverse order, actually. I'm going to do the same way I do the Bobby breakdown. We'll kind of go through the indexes, then we'll kind of update some of this dashboard that I have. We'll talk about sectors, we'll talk about industry groups, look over a few stocks, and kind of take it from there. So let's look at the NASDAQ and kind of full disclosure for everybody. I have not done my routine, so I'm kind of doing this on the fly with you guys. Um, Definitely, I know the open, right? Let's go to the 15-minute. All right, so here we go. We had the gap down at the open. We all knew that. We were all talking about that. Kind of market looks like it rolled over to about the afternoon. And we got a nice little rally, bumped up green. Looked like we wanted to sell off, and then we kind of rallied back and held in the green on the Nasdaq. Super positive. And this is a big thing too. Why I'm probably going to say this a couple times, but the news, just turn it off. Just turn it off. Like today was actually very constructive, and I think people got a little too ahead of themselves pre-market and a little too much panic for what was honestly, now that we're looking at things on the daily, completely normal and super constructive action. Like I don't really like this is looking to me very much like best case scenario in this chop fest right now. So, right, we had the easy market, we had the first kind of test, or sorry, really second test of the 10-day. We never really tested the 21-day. We rallied. We saw a lot of stalling kind of happening, a little resistance here. We kind of expected another pullback, but it was way worse than everybody I think expected. We ripped down all the way to 50. We talked about that rip to the 50, that rapid drop. The likelihood that we have a V-shaped recovery from here was very small. Very likely that we were into a choppy environment, and that's exactly what we got. We got this choppy environment, um, and where kind of new risk should have been very, very little. And the market continued to kind of chop. We saw a lot of the prior leaders starting to collapse, and we'll look through those. And then what we started seeing really towards the end of last week, beginning of this week, I think I talked about it in the rapid review this weekend, was this clear resistance at this downtrending line. If you look at the tops over on June 1st, and you kind of draw them through like this kind of region over here, this kind of region over here, you could see that clear resistance that we were getting right at that downtrending line. Um, the 50-day was a piece of support, an area of support over here, but then quickly kind of became just an area we were chopping up and down through. We got the cross now recently with the 10 to 21 below the 50, which isn't a positive sign, but it's not really an indicator. It's just telling you what's been going on and visualizing that we've been moving sideways and then starting to collapse through the macro trend a little bit. But the big thing that I talked about yesterday is we're kind of in these two ranges. I think the upside range is this downtrending line. The downside range is this June 9th low. Honestly, anything happening in this region is just super constructive and normal and pretty much what you kind of hope for and what you kind of expect, to be honest. Um, so when people were a little panicked today about, oh, we're already through the 50, we're gapping down at the open, there's this news, like people were panicking more, I think, because of the news than the actual price action. Don't get me wrong, some names did get beat up a little bit at the open, but it was pretty expected given we just got rejected, right, over here. And then we just had a pretty poor close the prior day. You're expecting that trend to kind of continue downward. I was personally expecting to see probably another down day in a row. especially closing below the 50. I expected us to kind of go down here. Now, the big question that I have right now, and what is, I think, on my mind is, can we see the volatility continue to tighten, right? From highs to lows, big here. From highs to lows, a little tighter. From highs to lows. Now, naturally, if we go to here, it's going to be tighter, but can we see it get even tighter? And can we see this kind of downtrending flag, pennant, whatever you want to call it, consolidation type pattern, holding above those June 9th lows and really, really tightening, giving us the opportunity that we can hopefully set up for a nice breakthrough, and that give us the kind of signal to open up risk. Doesn't necessarily mean we're out of the chop. It's just that first signal to be more of a risk on type of appetite. And again, we're talking a lot more of ideals right now, not necessarily what the market will do, but just ideals. But I think that's important to look at. Look at, like, if this stuff happens, this is like perfect. And that's how I'm looking at it right now. If we can hold those 6-9 lows, ideally maybe pull back, get a little higher again than this June 26 low, get another rebound, maybe hit a little more resistance, pull back again, have the 50 and everything start coming into it. And then if we get a simultaneous break of all the moving averages, break of the downtrend line, a nice strong volume day with lows staying higher, with things tightening up, volatility, that is absolutely ideal. Now, again, that's ideal. The other things that I'm watching for, right? There's just the continued choppiness. Maybe this downtrend line doesn't mean anything. Maybe we continue chopping around over here and the environment continues in the way that it is, where we should be less of an appetite or risk. Maybe we break through this 6-9 low and we're now below the 50 through the 6-9 low. At that point, I'm extremely bearish. At that point, I'm very likely moving to almost all cash. Because the likelihood is that when we make that new low, the trend is going to kind of go towards the downside. Or who knows, from here we might this might be the tightness. This might be the low and higher low that we get, and we may surge higher tomorrow and just take off and then off to the races and start trending higher and above these moving averages. We don't truly know. But just those, I think the three main levels I'm looking at is the downtrending line, is the prior low over here on 6-9. And then the moving averages, they're there. They're always something we're paying attention to. But obviously, if we're seeing this chopping around here right now, they're not entirely important. All right, let me just pop this chat out so I can see it. All right, beta Oracle bottomed at support, first green day in a while. Bought it low day. Agree. I was freaking out. The news more than actual price action of the indexes. All right, cool. We'll look at Oracle just because you're bringing it up. So we'll take a look at that chart. Not something that I'm personally following. I think it's really more in a macro downtrend, but I will take a look at it. Okay. S&P. Much more constructive, much more sideways action, still choppy, but not like that downtrending line. More support at those moving averages. Just much more uniform, much more healthy, and nothing really of concern there. Let's see. No distribution. 0.28. So technically, we're just like at a distribution here. What else? Yeah, no, actually, yep. Let's see. Dow. Sorry, I stand corrected. Are we at? Yeah, technically distribution day on the S&P. So I'll make sure I log that. Dow. Dow breaking down through the 10, but nothing concerning there. Russell. I don't like seeing the breakdown through the 21, but I mean a decent close, which is something to look at, right? A shakeout, decent close. I mean, this has overall been trending fairly well, maintaining those higher lows, so nothing too alarming there. So, to really, didn't want to move that. To really summarize what we're looking at right here, we are in a very constructive, choppy downtrend sideways market right now. Short-term downtrend, overall sideways, constructive market that is choppy, that is risk off, is really how I am currently looking at it right now. Where am I? All right, let's get over And let's jump over and start taking a look at some of the slide information. All right. So first thing we got to do, let's log that S&P distribution day for today. Let's take a look at what happened there. All right. So this is on the weekly. Let's go to the daily. Are we on the daily? Oh, we are on the daily. Okay, on the daily. All right. So we added this day today for distribution, bring it up to 5. So 5 distribution days here, and then we didn't have any change here. We did gain a day yesterday on the Nasdaq, so that's up at 9. So super high amount of distribution here, moderate amount of distribution here. See this gone in a week. We'll see this gone in a week. Still brings us to 8. Um, we're green at least on a lot of these days, but not within striking distance of that 5% to really wash things out, unless we get a really strong move. Um, so concerns, but I think like at this point, this is kind of pretty obvious that there's a lot of distribution coming into the market. And I think most of us have taken the proper precautions and the proper action. And not that this is signaling us to do anything different than it has the last week or so. All right. Let's look at the sectors. So here's our sector chart, sector breakdown. In the overall macro look, tech is still in the lead. We'll just do a quick daily. Energy and technology strong today. Everything else kind of went in the red. And now let's jump to Deepvue and let's look at those charts because I think that's more important, right? You could looking at the actual context of these sectors way more important. So all right, energy. Um, we're on the daily, so you guys know. Look, energy is still looking beat up. Like, there's no change really here. I don't really think that this is, we're having a couple strong days. We're seeing some volume. That's fine. It's not. This is below this 50, making lower lows from here. Trying to maybe like return to means type of thing. Like, not something I'm looking to pay attention to just right now. And definitely not one of the leaders. Tech. Tech much more constructive, right? Tech looking very similar to QQQs, very similar. Um, more constructive than the Nasdaq in general, but we're seeing volatility hopefully tighten up. Maybe we get a little bit rally here, and we see this kind of flag out. Excuse me. Look, we've had this big move. This is just look how easy of a trend this was. This is just simple, and then we got choppy, and that's just kind of what happens sometimes. Is you can't just go straight up, and then a lot of times when you have sometimes these powerful moves, you'll get things getting choppy and getting a little hectic. So, but we closed above the 50. Maybe yesterday was a kind of shakeout, and today was a little extra of a shakeout below the 50 on these names. Maybe we start to see things turn around, but time will tell. We'll look at some of the leading tech names, and we'll see how those charts look. But overall, I think this needs some time, but it's worth paying attention to. Consumer staples, if you trade those kind of names, um, they're basing, starting to come around. Would say it's above the 50. It looks constructive, but not leading. Utilities has just been kind of chaotic and choppy. Industrials has been super strong. This is the pullback to the 21, completely warranted, holding above that kind of basing pattern. We saw things kind of getting up here, tighten up, break to a high, start to trend a little higher. So industrials have definitely been worth paying attention to. Healthcare has been super, super strong. It's kind of broke out, rallied really strong. It's holding above those all-time highs. This is one of the leading sectors for sure. Communication services not worth our time. Real estate kind of sideways, but if you want to pay attention to that, I don't really trade a lot of those names. Consumer discretionary, um, choppy sideways action. Financials really looking good. Completely normal, right? We talked about this on a couple episodes before. How this was really nice to see the super, super tight action. And this was like textbook if you're looking at XLF from a technical standpoint, right? Big base, rally, pull back, find some support at the 50. We got the shakeout here. We bounced up, traded sideways, hit these moving average, surged, pulled back, held above the 21, and we saw like clustering and tight action for like a week or a couple days. And then somewhere in here, I think it might have been even last week, I said how constructive this really does look, and it wants to start breaking and surging, and it did just that. We did get that confirmation that that technical pattern was looking strong. We broke, we saw volume pour in, and now we're hitting those right near those all time highs. We got rejected, we pulled back. Today was kind of a weak day. But overall, like if you're even looking at where today kind of closed, we're closing above a lot of these price levels. We're kind of, maybe correcting a little bit and letting things kind of pause right below those highs, maybe form a handle and a little bit of consolidation, let those moving averages catch up and go. So financials looking beautiful, definitely an area to be paying attention to. Materials today was not a good sign, breaking through the 50, the 10, and the 21 that were all converging, breaking below this low. Not completely destroyed, but just kind of choppy. And then we already talked about energy. So that's what we got in terms of what's going on with these sectors. Summarizing, hey, keep an eye on tech. There's no reason not to, but healthcare for sure seeming like one of the bigger and stronger groups, and along with financials being another area. Those two groups being somewhere where I would be paying a lot of attention. Go back over. Let's talk about something on the industry groups. We'll go through my specialized rankings. Let that kind of load up. So I've been, as this is loading, look, cybersecurity, I wrote about it yesterday. I talked about it over the weekend. Cybersecurity has been one of those groups that's just been incredibly strong. A lot of the names are moving as a whole. Things are setting up very nicely, and there's just some clear leadership in that cybersecurity space and being one of the strongest areas in tech. Next from there is biotechs, genomics, anything really in that healthcare medicine kind of group. Really, really strong, trending very well, clearly bucking the trend, showing a lot of RS and fueling what the healthcare sector has been doing. So really, really good to see that. So those have been the two main areas. Some software names kind of populating too in the short term. And how did I mention yesterday? When we get these choppy markets, I'm a little more focused on the short term, especially when we start to see some of this rotation. I want to see, are there some prior leaders that are showing up still in the short term? Are there some new emerging possible leaders? And comparing that to the long term, the short term, paying attention to all of those and being aware of what might be some rotation into leadership without forgetting some of those prior leaders if they should continue a trend and are just doing some normal healthy basing. So let's talk short term first. This does fluctuate a lot more day to day, so I do pay a lot more attention to this day to day. In general, like there's a formula behind this that weights a lot of different stuff, and it's kind of I played around with it. Um, but yesterday we had cybersecurity was number one. Now it's number two. Genomics and medicine, they just kind of swapped. Biotech, GLP-1s, healthcare technology, digital health. We're seeing LiDAR in here, something worth paying attention to. This is a prior leader that's number 14 right now in the long-term rank. So I think that's worth paying attention to. Software, pharmaceuticals, there's some insurance stuff floating around in here. So really confirmation of what we were just kind of talking about. I do like looking at this confirmed versus emerging. We're definitely confirmed on the genomics. We're definitely confirmed on a lot of these healthcare names that are within the top 40, if not top 20, or even top 10 of the longer term industry groups, which is something that you want to see. In terms of the cybersecurity space, we're in the top 40. We haven't broke that top 20, so it's I still have it showing as emerging, but I think it's very clear, and I own, I own crowd in this, and this is a big reason why. Um, LiDAR confirmed, number 14. Looking at the long term, and we'll definitely look at some of these names. We still have memory. Memory has gone so strong. These AI names, satellites, semiconductors, things like that, photonics, crypto mining. There's your LiDAR again, biotech again. So those names still in the long term, still worth paying attention to. We'll talk about some of those stocks, and we'll look at what's going on with them just to really digest what it is. Because again, this is long term. Let's talk about what's been going on lately. As for today, Hinge just doesn't stop ever since it broke out of that base. Healthcare is hot, 100%. Oh, and for everybody that's in here, right? Chat's open. And you guys feel free to just say what's up. Feel free to throw some stocks you want to look at. Feel free to ask questions, throw some comments out there. And for my own sake, because I don't know everybody's YouTube name, if you want to, let me know who you are in Discord so I can kind of know who's in Discord, who I'm talking to, so I can link up the usernames in my head. All right, so the day gainers, we had AI, crypto mining, rare earth metals, oil, gas, semiconductors did rebound today, and a couple other names. The losers, Again, a lot of those material names were kind of the losers for today. I think that's a big thing that stands out in terms of today's losers. And then we'll look a little bit at the rapid movers. Again, we're seeing a lot of what's going on in the short term. This is just another way of looking at that short term to a long term rank and seeing the consistency of the short term moves that are starting to push its way up into a long term rank. And that's kind of what I'm doing, right? And I use these at different points and different trends in the market. I have my rapid movers, which is showing me how things are moving through my long term rankings. I have my long term rankings, which are just a bigger look at what's going on. Very, very helpful in some more true longer term sideways corrections. This worked beautifully. If you're looking at how we were pretty sideways from arguably October to basically about sideways and down from October to April, this fit perfectly in that time frame to see what's really bucking the trend and showing leadership and what I used there. And then the short term, like I said, really, really good, focusing on that kind of 1 month time frame to just show what's showing strength in there. And then again, rapid movers showing me that kind of connection between the short term and the long term and what's starting to work its way into that longer term ranking. News stuff, nothing going on this week. Earnings stuff, really nothing going on. I don't think PepsiCo, yeah, it's reporting tomorrow. I don't really care about that. But other than that, that's really all we got within the dashboard. So let's jump over to Deepvue. If you're watching, and you don't know, I'm a Deepvue partner. It's a tool I use for my stock screening, chart analysis, and yeah, one of the strongest tools. I Nothing compares to it, especially for price. Um, and they got some cool stuff. They just recently upgraded this AI, which is awesome, really really useful. It's super customizable, which is something that I really really want and beg for in my charting platforms because I don't want to see stuff that I don't want to see, and I want to make sure everything that I want to see is front and center. And a lot of great stuff with their custom screeners and things to kind of get you through your routine very effectively and quickly. Um, so let's see. We'll talk about my positions. I did add on crowd today, very, very small, about 10%, I believe. I think it was a little over 10%, 10, give or take 10% to my position as we bounced off of this 10-day simple moving average. Uh, I built up this position from back here. So I have some of a cushion. Looks like it wants to break out. Like I said, this is showing a ton of leadership lately. And yeah, just a good area. On that 10% ad, I'm basically using the low a day. That if we are to break that, I'll pull that bit off for a very very small loss, very negligible loss. But just looking to kind of keep building into this position little by little. I had some, if I remember correctly, I'd have to pull the exact buys, but I had some bought in on the tightness. I had some bought in on here as we kind of broke higher. I did add a little bit as we broke out. We then pulled back and I added a little bit here. So just kind of slowly trying to build this position. Again, seeing the clear leadership in this, getting a nice weighting in this with very, very little risk. Now, should this kind of break out from here, I'm at about a 30% position of my portfolio in this name now with very, very little risk, which is what I like to be able to do, especially. And this gave a lot of opportunity for that. So, should it move, should I get a nice big surge, I got a nice big chunk of my position in this. And I do that because I see the leadership within cyber and I see how well this name is acting. Eli Lilly, well, I think this is one of those names. I normally don't trade pharmaceuticals, biotech names, but Eli Lilly is a little different. Eli Lilly is a little bit bigger cap. It's a little less volatile when you compare it to some of those other names. And it was showing great leadership and has amazing fundamentals. It's a true CANSLIM stock, and everybody knows that's my foundation of trading. And this also it was giving me opportunities for building out my position with really really tight risk. My last ad was a little bit yesterday as it looked like we were kind of breaking from this kind of pullback right here and using this low as an area to shoot against. So again, was able to build about a 30% position on this name, and should this continue with its leadership and really really show some strength and start to trend out of this kind of big base right here. have a lot of skin in the game, but the risk is super low. So that's kind of where I'm at right now. I have been very, very hesitant. These are the only two positions I've really had for a while now, and they're just very small, low risk buys that I'm putting into them because I see the leadership. A lot of the other stuff that's out there, I've been kind of staying away from it for various reasons, mostly being the market. So let's first talk, while we're talking about that, let's talk SanDisk, right? Um, this is one of the things that I personally struggled a lot with when this was, I think, like 2021 or 2022, where I started to attempt to make these kind of pullback buys or these bouncing buys or these alternative entries outside of base breakout patterns. Um, this was one of the things I consistently tried to trade, and it consistently beat me up. So I'm going to talk about this because I learned the hard way on this. First off, you guys who have been watching know this was the name that I bought on the follow through day over here. It's the first position that got me out of cash. And then I had to kind of add it at multiple points along this time frame, and sold pretty much all of it. I forget the exact day, somewhere around up here. Now, one of the things that is so clear now, and I was talking about throughout the time, and I think somebody had asked me why this in MU, why I wasn't adding on these bounces off the 21, but I was back here, was because of the character change. We started getting a lot wider, we started getting a lot looser. This had gone on a really big run. And my expectations of this action was either sideways choppy chaos or breaking down and pulling back, especially with how much resistance we were seeing to the upside. So I know, yes, this name could have surged, especially with the ATR this name has. This could have went on another 20, 30%, and that would have been a perfect ad, a perfect swing trade, maybe whatever you want to call it. But um, the pattern of this was telling me that, and the market, everything was saying that this is likely going to be at the very least choppy, if not starting to form a new base. And that's kind of where we're at right now, right? I think it's very tempting to buy and add, and to even maybe take a new position over here as it reclaims that that 50-day simple moving average. But even with a high ATR name like this, like even if you were using low of day, you're using here, like you're still, it's a fast trading name. So you kind of have to manage it a specific way. But the real thing that I've learned over the years is, if we're looking at this right here, like, and that's not even a clean line. That's just me throwing something on there. Like, this is just downtrending. You're trying to catch a falling knife at this point. And you could say, oh, it's bouncing, it's reclaiming the 50. Like, we don't know if it's going to respect the 50. All I know is this has gotten wide, it's gotten loose. The whole group is getting wide and loose. The whole group is not looking strong. And the single reclaim right here in this overall, like, still completely downtrending, hasn't taken out a high of any day besides this shakeout day, maybe possibly below the 50 if that becomes that. I don't want that. What I would much rather prefer is something like Lily, right? Something where we start to tighten up, something where we are moving more sideways, something where it's a really little risk I can put in on a position. So maybe it's a 2-3% stop, and then breaking prior day highs, much more constructive to me than just buying because it bounced above the 50-day when it's been wide, loose, and clearly seeing upside resistance and declining. Um, so this is why I'm staying away from this. This is also, similar to why I'm staying away from these names. Now, look, this looks a little easier, right? If you go to the low here, maybe you got a little 5% stop. I could see people wanting to take that trade. But if I'm looking at things right now, like, there's not a lot of strength. Look at the RS line. We're dipping down on the RS line. We're in the red, which is below that moving average, which is showing me that it's showing low RS as of lately. And while everything else in the market's getting hit, this is just as bad as everything else. And there's no leadership really right here. So same thing, getting wide and loose. If this is going to come and turn around, like, this type of pattern, more likely than not, is not going to just bounce and rebound. Like, it's more likely going to form some sort of base pattern and give more of a traditional base entry. that I don't feel a need to try to trade on these like pullbacks on a name like this. Over here, I'm okay with it. Even over here, I was okay with it. But now at this time, breaking through some levels, multiple retests, creating lower lows, I'm staying away from those names. Um, and we're seeing a lot of that. So to just summarize where I'm at, yes, I understand memory. I do think that there is probably a long-term thought of this eventually returning. Um, but especially like look at some of these names. This is another thing to kind of talk about. Look at the depth, right? 35. Like that's not a pullback. That's a base we're starting to get. Let's look at SanDisk, right? 36, 30, we're starting to go 40%. These are base patterns forming. And I don't want to buy on the left-hand side of the base. I either want to buy on a tightness in the bottom or some support levels and climbing at higher highs and higher lows through in the base in the tops. And it's going to really, honestly, MU not as volatile. MU looking much better out of everything in terms of the technical ability. But, even still here, we're starting to get 30%. Even for a high volatility name, like this is just where I'm expecting this to be more of a base pattern and less likely to see V-shaped recoveries. And because I know that the likelihood is a base pattern, I'm willing to wait because if it is going to return to leadership, there'll be other opportunities to get inside of this one. So, all right. Well, before I forget, we'll bring up Oracle. Yeah, to me, look, I'll be honest. This is just no way in hell would I touch this name. Not a shot in hell am I touching this name of Oracle. So Beta, you can say a little bit more. I know you said you bought low of day, but to me this is clear catching a falling knife. It actually closed. It actually didn't close up for the day. It closed down for the day. We're below. Look, if you guys watch Ariel Hernandez, me and him trade differently, right? He's much faster than I am. He's much more short-term swing trading. I'm much more swing position trading. There's a lot of the same principles, but one of the things for any of us growth stock momentum traders is trading stuff below the 200-day simple moving average is just a waste of our time. What is the reason to buy something like this, right? Why am I going to buy something like this when just the reality, okay, like look how much upside resistance there is. Look at all these people that could be in this possible name right now, and almost every single one, unless they really bought right here at these lows, is in the red. What does that mean? That if they're still holding this, and we know human psychology, and if you've read a lot of the books, they all talk about why these base patterns form. We know that the climb from here is likely not going to be very easy. It's going to be very choppy. There's going to be a lot of stair stepping. And even if this is the bottom and we start climbing higher, it's not going to be a great performer, most likely. It's just why buy what everybody else is throwing out? You know, it's just, I mean, we're 45% off of here, right? I mean, we're a real long ways away from returning to freaking highs. And what that means is there's like even just I misclicked, but I mean, we're 55%. There is so much selling pressure in this name that it is going to likely be a big grind to get through this. And that big grind and that headache that you're going to deal with trying to get this to really, really trend well, um, there's going to be names that are going to move like a SanDisk, like an MU are moving, right? If we come here, look, oh yeah, that's a great move, but more likely, you know, it's going to hit some resistance here. And again, you're catching a falling knife. There's no reason. Like, I guess you're maybe shooting against the support here, but like, let's just do this. And I'm really honestly, I'm going to be honest. I'm wasting way too much time on this. But even if you bought here, right, these lows at the open, I guess if you want to use a small 2% buy here, but just to me, this is a waste of your time. There's really no reason to buy a name like this. This is anything below the 200. And Ariel had said this in his live stream as well. It should the 200A above the 200 should be a base for all your screeners. You don't even want to look at stuff like this, which is why I haven't even it's not on any of my watch lists. So I bought it with a short stop because it's reaching a level of support that it contacted multiple times. Yeah, and I see that, right? I see that, but to me, it's like you want to put your money where it's going to work for you. You know, do you think this is a leader? Do you think this is going to be a really strong, outperforming name that's going to beat the market and be a name that's going to give you some great returns? You know, it's going to be a harder name to hold. Like, look, you may be right. You may be buying the bottom right here, but you know, it's just not my strategy, not my way of approaching things. I don't think many of us momentum growth stock traders do stuff like this. You look across most of these people, whether it's Maggie, me, Jim Ropel, the 200-day, you're below that. It's automatically ignored. So, all right, Hinge, not Hinge, Hinge Healthcare, man, just ripping, right? So, this is more what we want, right? Like, look at this, above the 200, really, really tight here. There's probably an opportunity to buy here, opportunity to buy here on the base out, opportunity to buy here off the squat, like off the 10-day with the squat right here. And I didn't buy this name, but look, this thing just is taken off. So really, really strong, really, really powerful, continuing to trend well, extended. If you own it, beautiful, great stuff. If you don't, I would definitely put this on a watch list. Like, to me, this is 100%. I'm actually going to do this right now. It's going on my long-term watch list for the purpose of big IPO, kind of consolidation, due diligence phase, breakout of this huge, almost 3/4 of a year base, squat, breakout, really surging, coming up, just ridiculous move. Even if we shoot from here, you could argue this is getting in that, let's do the weekly. Look at that. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so you could argue this is getting very close to like a high tight flag type of setup, power play type of setup, however you want to refer to it as. So I'd like to see this consolidate and give an opportunity, but this is what I like to watch. Like, I see something like this goes on a watch list. If it gives me a nice tight setup, the trend continues, the strength continues, the leadership continues, then that's where I look to get in these. Because when you look at names, right, people go, oh my God, it's gone so far already. Like, this was last year, right? It's going to be hard to, gotta see if I can adjust this to put some context to it, right? But this was a name that just led last year, one of the biggest performers of last year with a 600-something% move. It based, and then it moved. I was actually able to trade this in the beginning of the year. This is what helped me out to get a good start of the year. I think I talked about it in some of the Rapid Review. And then it kind of based, and then it went, look how long it went, right, into February. Look how big of a move that was into February. 246% move. I didn't catch all of that, but and it's like, then it did exactly, like, look at what it did. Look, this is very kind of similar of just like a younger stock, just stair stepping. And you think, oh, can it really go higher? And, oh, yes, it can. So, all right. IX Ariel about today. He did mention how under the 200-day, there are really good moves don't happen, but the support lets you set stops right below the level risk reward. Yeah, but I'll tell you right now, because I watch his streams at times too, and I've gotten a chance to talk to him, and I actually had a conversation with him on the side, me and him talking personally about this, and it's a big piece of it. Should just, if you're trading any of these growth stock similar strategies and you're following somebody like him, it should just not even be on your radar. There's other names and there's other things. There's thousands and thousands of stocks. Why buy something like that? You want the best of the best. I think it will move just like ServiceNow when ServiceNow had support. All right, we'll give you the benefit of that. Let's see. ServiceNow hitting support down here and going up to this, here to here. 64% move. No, that's nice. It's not bad. Right? Hitting resistance at the 200, breaking right through the 50, but Here's the difference, right? So there may be likely hitting support the 50. Like, I get it. I get the risk reward. I understand. But again, is this, 28% move to the 50, small risk reward, reversion to the means type of thing, right? We're super extended to the downside. It's likely going to bounce. I get it. It's just, again, not how I trade, not how I think this strategy, most of our strategies trade. And there's no reason to break from strategy and break from your approach to try to bottom pick some of these names, even with the tight risk reward. Um, yeah, just again, not my thing. All right, we'll talk about some of the other names. Dell, super, super popular name. Super constructive. Loving the way this looks. Um, very, very tempted to kind of buy in here, but I'm kind of being a little bit patient. If it goes on without me, it goes on without me. But this is on my spotlight list, very, very high on my watch list. This is a genomics name. I'm just kind of watching just because of how nice it's kind of constructive and clean everything looks. You got Intel looking like it's break through the 50, not looking good, looking more like the MUs and the SanDisks. Honestly, this is going over to my regular watch list. APH, this I like. This looking very good, right? Big, big base. Broke out here. Kind of expected with this long trend, some sort of correction. I think I even talked about this. This was brought up maybe 2 weeks ago. And I said, ideally you want to see this kind of pause and tighten up around here and maybe form another smaller base. And it's doing just that. Possibly breaking down, but it looks like it wants to just kind of correct and form a little handle in here. So loving the way this looks. GEV starting to get a little sloppy. Kind of just bounced, rejected, but still a name to watch. This way, I don't know why this is on this. This should be on my blue list. This is something I am super, super keen on right now. It has a massive 73% base. Do not get me wrong. This is a deep base, right? But if we get some tight action here and we can get a small little like base cup handle, what everybody, you're going to say, oh, it's not a cup with handle because this is not a cup because it's 73% base. Okay, whatever. Big consolidation right at all-time highs. If we can get another consolidation with a tight area of risk in a name that's been showing a ton of relative strength, that's got good fundamentals in the financial sector, which we know is starting to really show strength, this looks beautiful to me. Again, I want to see, all right, I want to see this tighten up. I want to see this ideally, right, not break much lower than today's low, which it looks like it wants to, oh wait, I missed that. Okay. I would like to see it hold above this low, but I'd like to see it at the very least hold above the 21, form a little bit of a base, and then possibly tighten up and give an entry. So this is one of those names that are super high on my watch list. Dell is one of those names that are super high on my watch list. Being a little bit patient, just given how the market has been acting. And APH and GEV. This name, again, I should probably put this. These are probably the 4 names that are super high on my watch list. Power play, high type flag, etc. Though keep in mind, right? This is something that gets constantly. This isn't really a high type flag or a power play because it's not through all-time highs. When you get a high type flag or a power play, traditionally, if we're talking the names, I get exactly what you're saying. The characteristics, 100%. But for just so people know, there's a difference between having something break out of a base, run up 100% and tighten, and bottom, run up, hit resistance at all-time highs and tighten. They're not the same character. They're still both very constructive. They still are both great and really, really something we want to pay attention to. But for what a high type flag and a power play are, which are those super, super rare, very, very high probability, successful, massive movers, this doesn't fall into that category because that flag is not being, the pole is not being formed through all-time highs on a big run up and then a tightening. It's being formed as part of this big base. So just keep that in mind. So one thing I'll say a bit is you said not something you would usually take, choppy environment breakouts. Like just be conscious of over trading. If it's not something you normally do, then why are you doing it? It's choppy. There's not a lot of action. This is one of the things I've been talking about. You got to be willing to sit on your hands. You got to get comfortable with sitting out of the market. People want action all the time. They want to trade all year. The reality is, if you're going to do well, you're going to probably make the majority of your money throughout the year in a few names in a few months, and a lot of the rest of the year is going to be probably sitting on your hands and being patient and trading very, very small, very, very little. So, just keep that in mind. And again, people do things differently. I'm not saying this is just, I'm telling you how I do it. I'm telling you how a lot of people do it. There are people also doing what you're doing. I personally have just seen the more active I am, the more active most people tend to be, the worse they tend to do. The more selective you are, the more you focus on the real easy dollar markets, not the hard penny markets, as Mark Minervini says, the better you do. Because what happens is you take a lot of these, they're low risk, high probability setups, or low risk, high risk reward setups, not really high probability setups. You're constantly taking those in a choppy environment. You're constantly taking those little losses and you're just slowly leaking away equity, leaking away mental capital. And then when things get really good, people are not in the position to either have more equity or have the mental and psychology prepared to take to the next level and surge on that big powerful move that could be happening. All right, we'll flip through some more names unless somebody has some stuff to add. Wolf breaking down. A lot of these names getting sloppy. I'm really just going to try to bring up anything that looks... Twilio is definitely something I'm watching. Should put that. Yeah, a lot of these names that I've been watching kind of class and Rocket Lab looking rough. Hymns. Here's another example, right, of Hymns. Like, I'm watching this name, but I ain't looking to trade this name. If I'm going to get into trading this name, it's going to be somewhere probably up here. Snow looking really good. Let's fall into that. Let's see. All these quantum names look kind of trashy. I'm going to change the spacing on mine. There we go. Much better. I went through these names. All right, we kind of went through all these. All right, so we went through a lot of names. We're looking at some stuff. Yeah, look, listen. Let's just recap, finish this off. Coming up on an hour. Super constructive environment. A lot of positive things happening. Turn off the news. It's just noise. That's really all it is. Today was super constructive. We're watching it between those key levels. We're hoping for some tightness. We're looking at leadership. We're looking at if these cybersecurity names and the biotech healthcare names continue to show strength. We're keeping an eye on those prior leaders, though many of them I'm expecting to be more true base patterns that have to be formed, but we're still watching them. So keeping an eye on the AI semiconductor world. And that's where I'm at right now. Risk, very, very low risk. Like you guys saw, I have two names. I'm taking little buys to kind of build those as they continue to prove themselves. And in a position right now where even if we get a bad break, still looking pretty damn good from where I was. It's not like I'm really walking away with losses as much as it's just kind of playing a little bit more of the house's money now that I've seen things kind of get up in the cushion and things that have formed. So using that to kind of manage my risk. But overall, being patient, overall keeping the head clear, and overall just sit back, wait and see. Again, you don't have to trade every market, and you don't have to break your strategy. You don't have to constantly try to find a reason to trade. Another trader who I follow very closely, I like a lot of what he shares, is Matt Petrilia. He'll say it himself. He's very boring in terms of trading. He's not a big like. He's in a posture right now where he's really not active, and some people don't like it. And he's not super active on X because he doesn't think there's a lot of value in just sharing alerts and things like that and sharing charts. He said today, like, if you keep searching around, you keep flipping through charts, you're gonna find a reason to trade, and it's normally not good when you start doing something like that. So um, that's why, like, even in this market, I got a very small list of names that I'm kind of hyper focused on. And even these names, like, you don't see me saying I'm buying these names anytime soon. I'm just kind of saying, hey, if these can, I want to keep an eye on them. If they can set up beautifully and give me real tight risk entries, I'll take the trade. But I'm just watching them, not ready. Like, I don't have anything that's got a target buy right now on any of these names because I don't think it's there yet. Even on a name like Sizzle, right? Buying here is, this could pull back to the 21. It's not where I'm looking to enter. So these are not targets where I'm ready to attack on these names. And like I said, two names I own right now: CrowdStrike, Eli Lilly, clear leaders right now, clearly showing a lot of RS. Built into these positions, really, really low, tight risk stops, minor builds in this choppy market. But again, being the two areas that we're seeing clear leadership. So that's why I was willing to take some of those really small, low risk entries in the leading names. And that's kind of where I'm at right now. All right. That's all we got. There's the YouTube, there's the Instagram, not the Instagram, the Twitter or X, Discord. You guys know I'm always chatting up in there. And yeah, hopefully you guys enjoy these midweek kind of videos versus doing the buy breakdowns. It's a little easier for me to kind of do my routine. Um, I'll also go through a couple watch lists after this, but obviously that takes some time too, and a couple screeners. So yeah, I'll do that, and I'm kind of done for the day. But again, more sitting patient and waiting for things to tighten up and to be a little bit more of a higher probability environment. That's all I got. Stay disciplined.